Good afternoon. This is Teresa from Early Growth. It is 12 noon. We'll be starting our webinar in just a second. I'm just going to give a few people some time to log on. All right, so we're going to go ahead and get started. Again, good afternoon. Thank you for joining us for today's webinar, When to Hire a CFO, presented by Early Growth. My name is Teresa, and I'll be your moderator today from the Early Growth team. Go ahead and go into present. All right, so just a few quick notes before we get started. This webinar will last approximately 60 minutes, including some time for Q&A at the end. You can place your questions in the Q&A panel at any time, but we will be answering at the end of this. This webinar will be recorded and sent to everyone who registered today within 48 hours of this presentation. You can also find this recording and all previous webinar recordings on our YouTube channel, which is Early Growth FS. And with that said, I'm going to go ahead and get started. So first, let me tell you a little bit about Early Growth. We have been in business for over 10 years. We've been providing financial services to early stage companies for over 10 years in the sectors of accounting, CFO consulting, taxes, which we've been talking about a lot lately, valuations, and fund accounting. Again, we really love to service those early stage companies who aren't able to afford those full-time CFOs, but we are the perfect solution for that. This is one of the quotes that we love to use. This is kind of how we came to creating Early Growth. I'm going to read it really quickly. Startups face a huge burden in today's economy, often having to choose between funneling resources towards creating their goods and services or managing the often complex accounting, tax, and financial strategy planning necessary to run a successful business. And as you can see, you may recognize some of these logos. These are some of the companies that we currently work with. And today we have Cirque and Ala, who will be our facilitators, and I'm going to allow them to tell you a little bit about what they do, and I'll hand it over to Cirque. You can start us off.
Thank you, Teresa. Hi, everyone. Thank you very much for taking time to spend some time with us this afternoon. My name is Cirque Rowe. I am a consulting CFO with Early Growth, and I've been with the company for coming up on 7 years. As Teresa mentioned, I've been working with lots of different startups, mostly here in the Bay Area, but also in companies in Chicago and New York, other parts of the country as well. And I assist companies in different stages of their lives, from really early stage, like initial funding, to later on, Series B, Series C type of companies. I've assisted companies in software space, hardware, some commercial. Some consumer products, and I also work with a couple of nonprofits as well.
Yes, good afternoon, everybody. My name is Ala Ismail. I've been a consulting CFO with Early Growth for going on 10 years now. I too have had the opportunity to work with lots of different companies in various stages, and have been fortunate to see a lot of them go on and be very successful, large public companies. So it's been a real pleasure. My specialty seems to be in the SaaS area, although I've also worked with e-commerce, consumer product companies, hardware, service companies, and various other industries. And typically, my clients are here in the San Francisco Bay Area, but like Cirque, I also have clients around the country that I work with. And with that, I'll transfer back over to Cirque.
Awesome. So I'm going to just quickly tell you what we're going to review today. What CFOs do, how a CFO drives startup growth, when to engage with the CFO, and what's the difference between outsourced versus having an in-house CFO. All right.
Great. So, so thank you, Teresa. You know, I think the goal of this webinar is to really talk about what not only what a CFO does, but when companies should be engaging, and and what kind of CFO you should be engaging with, right? Because the needs change over time, and the needs are very, very different for different types of companies as well. And so, you hear CFO and you think of this title, this corporate title, but really, we should be thinking about a CFO as a business partner. And that's the way that I like to think about it. That's the way that I sell myself to my clients. That's the way that I think that I provide the best value. The way that I kind of describe my role is that, I say that I consider myself a business person who uses accounting and who uses numbers to help my clients and help the companies that I work with make better business decisions and make better management decisions. And so that to me is what it's really about. And there's a lot of tools that we have that we use to help us with this. And we'll talk about some of those tools and some of the things that we do. But ultimately, that's what it's about, right? You're going to have an executive team of the founder, the founder, who may be a technical person, or he may be an operational person, he may be a sales and marketing person, he or she, I should say, and that they're going to be preparing an executive team that also obviously incorporates those other functions as well. And initially, when you first get started, you're going to be really focused on things like product development and customer acquisitions, right? Those are the two main things that a company is looking to do when they first get started. And at that point in time, you really probably don't need a CFO, right? You probably need, you got your heads down, you're working on product, you're working on the software that you may be introducing, you may be working on the hardware, the service, whatever your company may be producing. But that's the focus, right? And the need for a CFO at that point in time is probably not there in terms of the value that a CFO might be able to provide versus the cost that is gonna take. And so the idea is to think about, okay, when does it make sense for us to think about bringing in a CFO, and what type of a CFO do we want to bring in? Right. And so, these are the types of things that as a business partner, a CFO is going to be doing for the companies that they're working with. So they're going to be doing business planning, right? And that's kind of the main thing. And all of this other stuff really falls underneath that. So what does the business look like from a financial perspective? And a seasoned CFO with lots of experience should not only be a numbers person, but they should understand the industry. They should understand the dynamics. They should understand the resources that's gonna be required for a company to flourish, and bring all of that experience into preparing a business plan. And that plan is going to include a financial plan, obviously. But in addition to that, a good CFO should also be instrumental in helping a founder or an executive team put together not only the financial plan, but the business plan in general, right? What's the market we're going after? What type of resources are we going to need to be able to fully develop the product? When do we need to bring those resources in? How much resources are we going to need? What kind of cash planning should we be doing? What kind of capital expenditures are we going to need if we're not just a software company and we need to be thinking about machinery or hard assets. Um, and a good CFO is also going to be able to kind of, maybe ask the critical questions of of an executive team who's putting together a business plan, that asks questions like, okay, we've got a plan here that says we're going to be really, really aggressively hiring people over the next 12, 18 months. Is it really reasonable for us to be able to expect that we're going to be able to hire these people at the rate that we're putting into our business plan? Because a lot of times, we think of ourselves as being able to make the hires when we want to, but it's really not that practical. And then what happens? We do the what if analyses of what happens if we don't actually hire to the plan that we have. And so kind of doing, some of these what if analyses as well is going to be critical, and being able to kind of present different models for success for an executive team. So, putting all that together, we'll be putting together, not only a 3 and 5 year plans, but, current operating plans, right? A 12-month plan that we'll be putting in place to really, really focus our attention on what we need to be doing this month, this quarter, this half, and this full first year. Other things like obviously pricing is something that a CFO should be involved with. Clearly, pricing a product or a service, there's a lot of nuance to that, right? There's a lot of nuance from the standpoint of, what kind of value are we providing to our customers? Does it make sense? Does the pricing make sense, to not only our customers, but does it make sense vis-a-vis our competitors and where we think the market is going? Does it make sense for us to be doing kind of a freemium plan where we, provide a free service, and then add on different services that we charge for? Do we have a service or product that is that should be commanding a premium in the market? Are we more of a me too, kind of coming into the late in the game, but we have a few features that are going to be critical, and therefore we're going to come in with pricing that undercuts the market? All of those kinds of considerations, a CFO is really, really great, or should be really, really great at being able to do the market research that's required, or assisting the team with the market research that's required, so that pricing discussions are effective. And obviously, from the standpoint of doing at some point, doing a merger or acquisition, whether we're acquiring technologies and companies from the outside, or we get to the point where it makes sense for us to exit and sell ourselves to another bigger company, or merge with another bigger company, then obviously, at that point you're going to definitely want to be talking with the CFO. Okay, so let's go next. Okay, and so from a financial planning perspective, these are some of the things that we're going to be looking at. We're going to obviously be looking at some financial projections. And when I say financial projections, I'm not just talking about okay, well, this is the number of users we're going to get, and this is how much they're going to pay per month. Obviously, those things are very, very important. But fully financial projections from a revenue perspective, a cost of goods perspective, an operating expense perspective, right? So all of that gets us to kind of our income statement, which says this is how much money we're going to be making or losing on a monthly, quarterly, annual basis. But also, and maybe a little bit it may be a little bit nuanced for some of our listeners, but really looking at what's happening with our balance sheet and what's happening with our cash and what's happening with our assets and liabilities and our equity, because just looking, let me back step a little bit. So a lot of entrepreneurs early on, when they start putting together a financial plan, they look at it from a standpoint of what I would call a modified cash-based financial plan, which is basically they're looking at cash, right? When do we expend cash? When is cash coming in? When, and just looking at literally the checking account balance, right? Which initially that absolutely makes sense, and we encourage that for founders at an early stage who are focused on how much time they have to live, right, on the cash that they have, and making sure that they're using that wisely and conserving cash, to the extent possible. But as a company grows, you will get to the point when that is no longer satisfactory. And that usually happens when an investor gets involved, an external investor, right? So at some point, a founding team will develop product. They'll have used their resources, individual resources, maybe friends and family money. They'll get to the point where now it makes sense for them to go out and raise external financing, right, from VCs or angel investors. And at that point, the cash-based financial plan is no longer going to be sufficient. Investors are going to expect financial projections and financial reporting on a GAAP, or generally accepted accounting principles, basis. And this is where probably a non-financial person is probably going to throw up their hands and say, okay, I can't do this. And certainly if you're at this point, you're definitely going to want to engage with a CFO. But this is the kind of financial projections that I would say a CFO is going to be critical in assisting you to prepare. Obviously, things like rolling cash forecasts, right? Even though we're doing a financial plan that is GAAP based, and looking at the income statement, balance sheet, and cash flow statement separately, obviously, keeping our eye on the ball in terms of where cash stands is really, really critical. And this is again kind of where I would say that once you kind of get into a financial projection that is GAAP based, really understanding the ins and outs of what's happening with cash that is separate from the income statement. Really allows a CFO, and then obviously once the CFO has all that information, being able to convey that information to the executive team, to investors, to external parties like banks and other parties is going to be critical. And so as a founder, this is stuff that you should kind of be aware of. You should kind of know it. A CFO should be able to explain it to you. But all the really nitty-gritty stuff that's involved in really understanding the nuts and bolts is not something that you should be focused on, right? Again, kind of going back to the beginning, you should be focused as the founding team. You should be focused on product development and customer acquisitions. And so let the CFO kind of understand all the nuances and intricacies of the financial projections and the cash forecasts, and being able to convey that information properly to you. The annual operating budget, clearly, you're going to have a long-term plan that looks out, 3 years. But then, you need to dial that in, and you need to understand kind of what's happening, this year, right? This fiscal year, what is happening on a monthly basis? How much revenue are we projecting to be bringing in? How much operating expenses are we actually projecting out? And making sure that we're staying within the boundaries of kind of what is, what's reasonable for our company, right? And we'll be putting that budget, we'll be preparing that budget in obviously in coordination with the executive team and the founding team, and understanding kind of all the nuances and all the, I guess, the gives and takes. Some of the compromises that we're going to be making. But once we kind of have an annual operating budget, it should make sense with regards to the marketplace that we're in, the revenue we're projecting, the resources that's going to be required to be able to hit those revenue projections, and obviously then what that means in terms of expenses that is going to be required to get those resources. And then to the extent that we have debt, we obviously have to be managing debt properly. And this is an area, and especially this is probably a different topic, and we go into it in other webinars as well. But when you are ready to raise financing, equity financings from investors such as angel investors or VCs, it's going to be, if you haven't done so already, you should be thinking about adding on some debt. When you're raising equity, it's a way of extending your runway without giving up much in terms of equity. At an early stage, when our valuation of the company is hopefully increasing steadily or at a rapid pace, then being able to do that with some cash coming in the form of debt rather than just in terms of pure equity. I think in most cases that is a much more efficient and much more more optimal way to go for you as the founding team in terms of how much of the company you get to keep.
Sirk, if I can.
Of course.
I think a lot of times when we talk about managing debt, it's perceived as a kind of a discussion with a bank or another financial institution. I think the critical factor that a CFO brings is the experience in dealing with multiple sources of debt, and the ability to talk to those folks a little bit in their own language. And I think that's really, really helpful in securing the best terms and projecting a sense of competence on the side of the borrower, because as you may know, debt comes in variety of flavors and terms and conditions, and there's a lot of terminology and a lot of details that may be overlooked for somebody who's really not had the experience in dealing with them before. So it's not managing the debt. It's not just about asking banks or financial institutions for terms and just figuring out which is the best one and getting back. But it's also in the negotiation process and determining if there's any kind of related risks. And ultimately, it might even help you, because when the bank knows that there is competent financial management in the company, it helps also with the terms that they send back.
Yeah, that's a great point, Ala, and I'll even take that one step further and say that competence and that sense of confidence that a bank or lending institution might have, just given that the company is being looked after, for lack of a better word, by a competent CFO. Really, that same argument also holds true for equity investors as well. Right. So for VCs and angel investors who are looking to, or who are looking at the company in terms of making an investment, knowing that there's a seasoned CFO who understands the business and who understands the financials, who understands the reporting requirements and what VCs and investors are looking for from financial reporting, from financial planning, all of that stuff again will lead to more confidence in the company in general, and help the fundraising efforts make it go smoother. Thanks, Ala. Appreciate that. Okay, and then obviously financial reporting, that's a big one too. And in financial reporting, clearly, we're talking about things like, financial statements, right? Monthly financial statements, which looks at, again, kind of going back to those GAAP statements or GAAP accounting, at an absolute minimum, we're looking at a P&L or income statement, profit and loss or income statement. We're looking at a balance sheet. We're looking at a cash flow statement. Those are the three main financial statements that you should be producing on a monthly basis, and should be going to management as well as, in most cases, the board and other investors. But in addition to that, there's others, right? And other financial reports or other management reports, that you may be interested in seeing, or you should be interested in seeing, are things like things like KPIs, right, or key performance indicators. And so putting together the set of key KPIs, it's like a CFO with kind of their vision of what things should look like in as a whole, as a manager, will help you put together a list of KPIs that makes sense for the company to track on a monthly basis, to make sure that we are meeting, or if we're not meeting, why, and what do we need to do to fix it. And then to be communicating that to the management team, as well as, again, to the outside. And then depending on every single company, every different company, there's going to be different reports, right? There may be manpower reports, there may be hiring reports. There may be spending details in certain areas that are kind of key to understanding what's happening with the business. There may be market reports, yeah, there may be market reports. There may be all kinds of different types of reports, depending, again, on the company, specific company, and a CFO should be able to kind of help steer the direction in terms of what reports make sense for the company to be tracking. And then obviously, for once we do have a set of investors, you'll have a board, you'll be setting up a board, and you will be having regular board meetings and preparing financials for board meetings. Again, kind of goes back to this idea of setting confidence, right? So we want the board to continue to have confidence in the company, in the management of the company, direction of the company. And it's not just about how are we doing in terms of customer acquisitions, it's how are we doing in terms of our financials, right? I mean, if we're meeting our revenue targets, but our expenses are 100% greater than what we expected, that's a problem. And how we present the information so that the board gets the right level of information, not too much, not too little, and is conveying the information that we want, then that's going to be obviously critical to getting the board to be happy with the direction of the company. And then finally, we talked a little bit about fundraising. So obviously, a CFO is and should be very, very familiar with the fundraising efforts. At the stage that we're talking about, we're not talking about kind of really, really late stage companies. We're talking about early stage companies, and so a CFO should be, able to introduce to investors and to other parties that that are going to be helpful in fundraising, right? And so it's not just investors, but it's other parties that are involved. We're going to be looking at not only VCs but angel investors. We may be looking at family practices. Again, it kind of depends on the stage of the company, right? Are we a seed level company? Are we a Series A, Series B? Those different series of financings are going to be targeting different types of investors. And so rather than just kind of taking a shotgun approach and just sending our pitch deck to hundreds of VCs out there, we'll be able to take a more targeted approach, find VCs and find angel investors, or find whoever would make the most sense for us to target, and be able to make introductions. And then obviously on the equity and debt negotiations, we are very knowledgeable. We're very conversant in the, I guess, the language of VC and debt negotiations, and we'll be able to assist the founding team in terms of being able to negotiate and discuss our company and the value proposition that we present to our investors. So with that, I will I've been talking for too long. I will hand it off to Ala to talk about some other issues with CFOs.
Right. So I'll be covering really how would a CFO kind of uh, help you with your business, with your day-to-day business, to help you with your growth, and what to look for in a CFO. And I think Cirque mentioned it a little bit. We use the term CFO very specifically, but it's important to know that CFOs come in different flavors. And a CFO that is focused on early stage companies, companies in the seed to say C round of financing, or in the early stages of developing their business model, is different than a CFO for a large multinational corporation, or even a company that is focused on, say, strategic investments, or even an established company with ongoing revenue, but very, very complex systems. The CFOs for those companies are very, very different than the CFO for um, a startup company. So when you talk to a potential CFO or somebody that will help you in your business model, try as best you can to get somebody who's really familiar with your space, or in your stage of company, because like in everything, there's different expertise, and in the startup world, it's important to get somebody who's kind of been through those cycles and could really, really add to your management team in lots of different ways, as Cirque just mentioned. So really, the CFO is really a business partner. A lot of times what I see is the entrepreneur or the founder uses the CFO as kind of a sounding board, a more kind of seasoned professional that could kind of look at things in a more conservative, kind of balanced way. Management teams by design have different constituencies. The sales guy wants to sell. The marketing person is marketing. The engineers are focused on their product and their product development. It seems like the CFO is kind of puts all of that together and is able to give a more rounded set of advice to the management team. And initially, I thought, what is a finance guy doing with a bunch of technical people? And the more I've gone through my career, the more I realize why a finance person is a really critical person to have in a management meeting, or a senior management group, just because they bring a perspective, not just from the financials, but overall business acumen that I think is really helpful to companies and really, really drives growth. Next slide, please. So so one of the things, by virtue of a CFO looking at your financials in the same way that certain managers on baseball teams look at metrics, by looking at the numbers, you're able to identify where your strengths are, some of the competitive advantages. For example, by looking at gross margins, you're able to say, wow, we're doing great here because we're able to produce this product at a low cost, and our competitors are not able to do that. So that's a key competitive advantage that we have. Or conversely, on the gross margin analogy, wow, it really costs us a lot of money to put this product out to the marketplace. We really need to look at that, because there's not going to be enough money left over to cover our operating expenses. The other thing too is a CFO could understand the different market opportunities. We talked a little bit about financing. It doesn't have to be operational. We talked about financing. A CFO who has their pulse on the financing world could tell you, hey, this is a really good time for you to go out and raise, just because there's a lot of money out there. Or they're able to then identify key investors, or key windows that may be shutting down, and this is the time to go out and raise money, or this is the time that we need to hunker down. A good CFO will think long term, not just a lot of the, I don't want to beat up on salespeople, but say an example, a salesperson rightfully has kind of short vision. They are looking at the next quarter, the quarter after that, or maybe the year, where a CFO looks at kind of a longer term and says, okay, this is where we are now, but where do we want to go? And how does that look financially? And when we do get there, is that going to be a successful look, or do we need to tweak things now so we could adjust the future as best we can? The other thing too is that a good CFO will identify efficiencies, and a lot of times these efficiencies center around partnerships. There's a tendency for entrepreneurs to say, hey, we're going to be able to, we should be able to do everything ourselves. Where I think somebody who's kind of been there and done that understands that strategic partnerships, whether it's partnerships in developing your product or partnerships in selling your product, or strategic mergers, for example, that is usually something that the CFO will chime in on, just because at the end of the day, besides all the operational benefits, he or she are able to then identify the financial benefits as well, and perhaps put that together for a management team to clearly visualize. And then finally, the CEO could utilize the CFO to assess management effectiveness. In any competition, which business is, tracking your metrics and figuring out how you're doing on the score. A partner that I worked with in an accounting firm, just says we're the scorekeepers, and at the end of the day, it's all about the scoreboard. And really, the CFO really has that scoreboard and could help the management team assess their effectiveness. How are we doing? How are we spending too much? How long has it been taking to develop a product? We're hiring a lot of resources, and we're not getting a lot of benefit from it, say in the sales. Our marketing programs are too expensive because they're not yielding the results we want. Those types of discussions, which sometimes are difficult but are important to have. Next slide, please. So another thing too is by constantly presenting a forecast and a roadmap in the financials, you help everybody kind of maintain the customer focus. At the end of the day, that's really what's going to be the key to your success. Whoever your customer is, whether you're a service company or a product company, to be laser focused on your potential customer. And to show that effectiveness in financial projections and just general management discussions is really key. The other thing too is that we help with initiatives. We help visualize initiatives for growth within the company by just kind of looking at specific plans and doing, say, pro forma budgets or forecasts on it. That kind of starts to create kind of cost benefits for different growth initiatives that the management team may have. When you're putting together a program, if you're able to kind of put financial metrics around that, you could then determine what kind of impacts it would have on the whole organization, whether the organization or the employees or the stakeholders of the companies. And then finally, a CFO could help you with fundraising. A lot of times the VC introductions are a little bit overstated. A lot of times your CEOs and founders have a lot of VC contacts, but it's really the relationship and the ability to speak in the same language as a lot of these analysts from VCs really bridges the vision of the founders and the management team with the financial sense that a lot of the investors, in this case, VCs or other investors, will have. So it's kind of the founders and the management team present the vision and the operational road track, while the CFO kind of ties that all together with the financial modeling. And at the end of the day, it seems like a lot of the venture capital investors, that's what they come to the table. They understand your product, they understand the business, they understand all those aspects, but underlying all of that is the financial relationship and how it ties in. That's what an effective CFO will help tie them in. In short, really, a CFO is not just an accountant. A CFO is a businessman who understands your business as well as you do, maybe not on the technical side, but also is able to kind of relay that to financials and related forecasts. Next slide, please. So we've kind of covered specifics to a CFO, but now let's talk a little bit about your whole financial services and support, and when should you engage, and what are the different flavors of finance and accounting help that you'll see out there. I think if you're a company that has raised anything north of $500,000 in some kind of financing, whether it's through debt or equity, I think that's the time to engage a finance professional, just because you have outside stakeholders there and you need to make sure that you're managing their money effectively and providing the reporting that they need to track their investment. If you have revenue of in excess of $20,000 a month, that's a fairly significant pace. So that's the time to start engaging financial professionals so you could get a handle on your business and ensure that you're invoicing your customers on time, paying your bills and paying your employees, and presenting those financials in a timely manner as well. Anytime that you have outside investors is in any kind of material way, you should think about hiring outside financial help and not do that in-house, just because you'll need to present your financials in a manner that they can digest, and make sure that you have the internal controls and processes that the financial information that you do provide is accurate. And then if you just have a lot of activity, there are companies out there that have no revenue, but just a lot of activity. So if you have a lot of financial transactions and lots of in and outs and complexity to your business, think about hiring a financial professional or a set of financial professionals to help keep things in control.
Ala, could I just chime in here for a second?
Absolutely.
Yeah, so I think all of this goes to when people ask me, when should we engage with the CFO? I usually kind of say it in a succinct manner, and this is a family program, so I'll say that you'll want to look at hiring a CFO when you, as the founder, experience the oh shoot moment. Right, which is that moment when you realize that what you've been doing from a financial perspective is no longer sufficient, for the needs of the company as it moves forward. And in many cases, in most cases, I would say it's going to become pretty apparent when you hit that moment. And some of these 4 bullet points here, I think all will point to that moment as well.
That's right. Excellent point. So here's a little chart about all the different flavors of financial team that you might have. I've seen companies, for example, have a regular ongoing business that have no CFO, no bookkeepers. All they hire is a tax firm. And at the end of the day, they just kind of give them all their bank statements and say, hey, here it is. So that's one part of the infrastructure. You could just have a tax firm, somebody who could just do your annual taxes and keep you statutorily compliant. The other is the CFO and a bookkeeper. So a bookkeeper is really somebody who will do all the blocking and tackling for your company. And record your payroll, record your revenue properly, invoice your customers, pay your bills, maintain your books, compile your financial statements. So a bookkeeper can do all of that, but a CFO layer on top of that will help you make sense of all that information. There's a lot of bookkeeping firms out there or companies out there that will essentially compile your financials. With machine learning and all this products are out there, it's becoming more and more automated that you could just take the financial information and shove them into some kind of program and generate financial statements. I'm finding that a lot of my clients who have kind of gone that route are still wanting more. And a seasoned financial person like a controller or a CFO helps you not only take that financial information and make sure that it's properly formatted, but make sense out of that information. And a lot of times these automated services don't do that. It's just kind of a one-way path of information without any kind of analysis. So a CFO and a bookkeeper is another kind of solution that you might adopt. Another one is internal hire. That's somebody internally that's in charge of your financials, and that's really not only for developed companies. In a lot of my clients, the best structure seems to be that they hire a company like Early Growth to take care of all the kind of the financials and all the technical side of their finance and accounting infrastructure. But then they also have somebody internal that is there day to day that helps with the process. And I find that that's such a great relationship, just because, when you hire consultants who kind of come in from time to time, the one thing that we miss is the person on the ground that could make sense and answer questions. So the internal hire doesn't necessarily have to be an accounting or a finance professional. It could be, a general office manager who has kind of a little bit of experience in lots of different areas. Or it could be a full-blown accounting and finance staff. Like I said, our typical companies, after say the C round or about 3 years of business, they tend to kind of gravitate into that direction and have different flavors of hires, where typically the first hires are, the bookkeeper, somebody that is there to handle a volume of transactions, and it starts to make more sense because the volume is increasing to hire somebody internally. And that person could work with a external controller or CFO for the occasional technical expertise. The other thing that you'll need out there is a valuation firm. I'm not sure if all the companies out there know that if you have a stock option plan, you are required by IRS code to do at least an annual valuation of your common stock pricing. That's a requirement. So you might be working with a valuation firm to do those 409A valuations on a regular basis. And there are companies that are like Early Growth that put all of those things together, that can work with your internal hire, provide the bookkeeper, provide the CFO, do your taxes, and also do the valuation. And those are integrated financial service firms that are one-stop shops. And a little bit of propaganda for our part. That's what early growth essentially does. We do all these things in one shop. Provide seasoned CFOs, bookkeepers, do your taxes, work with your internal team, and provide valuation support. Next slide, please. I guess we're done.
That's it. Okay. Thanks, Cirque and Nala. I really appreciate it. This was amazing. Well, we're gonna answer some questions actually. We've got about 10 minutes. Let me just get out of here. But if you do have any additional questions, you can email us at webinars@earlygrowth.com. If you want to know a little bit more about what we do, you can find that at earlygrowth.com. And of course, don't forget, this presentation will be sent to you within 48 hours, or you can find us or find it on YouTube at Early Growth FS.
Hey, Jerisa, looks like there's a couple of questions that came through the chat, the Q&A. We can probably discuss those now.
Yep, I'm going right there. So we have a question from Lisa, and she said, what are some examples of how a CFO can help on the operational side at an early stage, specifically for an e-commerce company?
Yeah, great question. On the e-commerce side, it's really putting together your forecasts to understand the margins. A lot of times, e-commerce, that's like the critical aspect of figuring out the viability of your product. So operationally, putting together a pro forma budget for when you go to market. So if you're developing a product, figuring out what the product cost, your logistics cost, the related marketing, and putting those forecasts together that will help you set pricing, help you with marketing decisions, marketing program decisions that you might make. So by just going through that forecasting process and involving the different stakeholders in your operational stakeholders in your organization, kind of starts to develop a picture. So before you go ahead and make those decisions or sign contracts or go to market, you're able to get a good visibility on how that will look. Once you're in, online and shipping product.
Awesome. We have a question from Mahindra. How does a CFO help with the perception that he or she is not just a numbers guy, but a strong business partner? It is not obvious that the CFO is a business partner in some situations.
Sure, I'll take this one. Obviously, also a good question, and I don't think there's like a set answer. With CFOs, a lot of it kind of depends on the needs of the founder. In some cases, you don't really want someone, you don't need someone at an early stage that is going to be necessarily the strong kind of like, the guy that's going to come in and roll up the sleeves and really get their hands, involved in everything, right? Because that can get expensive. And so, one of the things that we always stress, especially for early stage companies, is to focus on the things that are important to the company, that's urgent to the company. And we also encourage, obviously being financial people, we encourage us to be really, really careful with the money that we spend. And so, one answer is that obviously you want to interview the CFO, the potential CFO, ask the questions that are kind of critical to you in terms of the things that you're looking for in a CFO, not only from a numbers perspective, but as a business partner. But also just keep in mind that, that there are different types of CFOs, right? There are, CFOs like early stage or early growth CFOs like Ala and I, where we help, early stage companies, and we work with a lot of early stage companies, right? And so it's hard for us to get as involved as someone who I would consider to be more like a fractional CFO who comes into your office 1, 2, 3 days a week, right? And so the different levels of interaction and how deeply involved a CFO gets is going to depend on your specific needs. So it is going to be kind of contingent upon you to kind of figure out, what you're looking for and whether you're really looking for a strong a partner that is going to get involved in all aspects of the business and not just the numbers. To the extent that that's what you're looking for, you obviously need to talk to them, interview them, ask the pertinent questions, and make sure that they bring to you the not only the right experience, but also the right communication style, the right personality fit, all the things that you're going to be looking for as a real partner to you, right? As an executive member of the team and not just a consultant.
Okay, another question, and we have just about 5 minutes. What's the definition of a lot of financial activity or a lot of expenses?
I think if you, some of the guidelines that we put through, if you're generating, I would say somewhere in north of 20 to 30 customer invoices a month, if you have 5 or more employees, if you have a lot of accounts payable, you're paying vendors, a lot of contractors coming in. If you cannot manage your financial process within, say, 2 or 3 hours a month, then you have 2 or 3 hours a week, then you have a lot of financial transactions, and you should have somebody dedicated and looking at those. It's really hard to kind of pinpoint, but if your management of the finance and accounting is taking more than, say, 10 to 20% of your weekly time, then that's not money well spent. You need to focus, as Cirque said, on developing your product or selling and marketing your product. That's where you should be focused, and getting somebody to help in the finance accounting operation is money well spent.
Awesome. And we have one more. Make sure I can understand this. How would you recommend bringing on an internal CFO/partner or working with an integrated firm such as Early Growth when you are in the very, very early stages and have zero capital?
Yeah, so I think Amira, at that stage you probably don't want to be bringing on anybody, to the extent that you have some general financial knowledge, that that it's probably sufficient. When you have zero capital and you're just kind of expending some of your own time, maybe a partner's time on the company, and there isn't a whole lot going on. It's probably at an early stage to bring in a CFO. Whether you bring in an internal CFO or you work with an integrated firm like Early Growth, I think you're going to find when you start researching it and talking to people that an integrated firm such as Early Growth is going to be much more practical and efficient for you from a cost perspective and the value that you're getting for the money that you spend, because we work on an as needed basis, right? We don't do retainers, we don't do monthly minimums, we don't do any of that stuff, right? So we work per your needs and your demands. And so I think you're going to find that that's going to be much more effective for you rather than bringing in an internal CFO. And then there was going to be one other thing. One final thing that I was going to add is that, to the extent possible, start with something like QuickBooks Online. And at least start gathering information and entering information into QuickBooks, even if it's at a very, very rudimentary level. And then once you start doing that, I think if you have a little bit of knowledge about that, then you'll be able to at least kind of keep things running until you get to the stage where it kind of makes sense to bring in outside people.
Yeah, and if we've overblown our case for the accounting and finance, you have to excuse us. That's what we do. So, but really the focus should be, as Cirque mentioned before, it should be on your product, and selling and selling and your customers. Accounting and finance is support, but that's really where the focus should be for your resources.
Awesome. Thank you so much, Cirque and Ala. This has been a great presentation. Thank you for everyone who registered today. And we hope to see you for the next one. Have a great rest of your day.
Thanks, everyone.
Thank you.